It is 16 January 2014, and these are market truths. What are truths? They're facts, and you need to subscribe to see the full story. But we're going to take a look at the S&P 500 and the banks yesterday. January 15th made a good and substantial move, but we have to look at all the banks to understand the moves, and we have to look at the option plays. There's plenty of option plays out here. I have some big ones that are going to expire tomorrow, and you have to see what your options are within options and why do you participate with options, because that is time premium, because that is the discount in the market to help you with risk management, or you're just doing a 50-50 flip of your portfolio, or you're hoping and waiting. Hoping and waiting is not a risk management strategy. It's just hoping. First up, KeyBank had quite a drop here from yesterday's rise, did it not? This is a 5-minute chart. Each candle represents 5 minutes, and stocks do rise to resistance and they do fall to support. This is a 60-minute chart. Each candle represents 60 minutes. This was this morning. There's a shadow low here, and it went to the bottom of the Bollinger Bands in the cyan, the wavy little spaghetti line. And then there's a solid line here, and it landed right on that line. My goodness, when was that drawn? That was drawn on November 13, a double top. Let's take a closer look at where that line began. It's a diagonal line. Let's look back 60 days. Boom. November, right here. 11/11/13. And we had a little double top, but we just ran a diagonal trend line here to the next top, let it cut through, snap to grid, bang, hits it right on the nose. You have to believe in your trend lines. Let's look at the S&P 500. S&P 500. This is a 3-minute chart. We remember our daily charts. And these lines here go all the way back to 2011. And we were in this channel. Go back and look at the videos of October, November, December of 2013. And we can see is the S&P 500 fell to where? To support. It rose to where? Resistance. It fell to support. Not difficult to understand this path and this pattern. And we talked about it up here, that will it stay up above? It did not stay up above at the end of November. So we took another shot at it December because we didn't recycle back to the bottom part of the channel. We fell to where? Support. Support happened to be this red line, which is the 50 EMA, exponential moving average. And then we stayed up above it, and we fell a few days through our support line of the 18 EMA, but we came almost to the top of that. And I think that's going to be tested again. Maybe not. Maybe it's up and away. What's the story with the banks? Well, what's the story with some of the banks, we should say? We're going to take a look at KeyBank. This is a daily chart. Each candle represents 1 day. And you want to study and understand what a candle is, and because this covers the emotions of the buyers and sellers, the traders. Buyers and sellers, that's all we have when we trade. And there's no news here, no news marked here or on the S&P 500 chart. So look at the weekly. Look at the weekly. 2008. Look at this. Bang, bang, bang. 4 months in a row, it fell. And if we ran a line through here, would we not see that we broke this trend and we're rising back? Once it reaches 15.20 on key, it's an easy rise to about $18, $19. Let's look at the monthly. You can see a clearer picture here in the monthly. Can you not? April. The monthly chart, each candle represents 1 month, and this is October 2007. February 2008, it held until we hit May of 2008, and then July of 2008. Bang, bang, goes the dynamite. Rising back up, and there is very little resistance from this point to 1977 on the 1-month chart. Well, what about BAC? Looks the same, doesn't it? SNV looks about the same, doesn't it? H-band looks about the same, doesn't it? RF looks about the same, doesn't it? Can we depend on these banks all to walk back to the top of the mountain? If the elephant walks down the mountain, will it return to the top? Well, let's look at Morgan Stanley. Looks like it's getting through this candle pretty good, isn't it? Morgan Stanley. Let's look at BK. Wells Fargo. I would say it rose through there that 2 month pretty good, didn't it? And then broke into new highs. This is back in 2007. This is back in 2008. 2008. Wells Fargo. How about Citigroup? JP Morgan. Well, we can see here clearly that it did break into new highs, trading right now at $59.03. We jump over to the airlines, United Continental Holdings. This is 2008, February 2008, March. So bang, this is a monthly chart. Each candle represents 1 month, and has it not almost gone all the way back to the top? Gas prices are high. There are less airlines now. Here is another picture of the S&P 500 from 2002, diagonal low, 2009, 2010. This was the 2011 here channel. And as you can see, it's broken through. And look at this, right on the nose. It finds support on the 2009 diagonal low. And it has broken all the way past the diagonal 2002 low. Very impressive. And a 13-year split top represents this line. This is KeyBank once again. Isn't this a pretty picture? Look at that. Finding a bottom and going up above this trend line that goes all the way back to 2009. Very little resistance to get us to $20, 19, 20, 23 resistance. 26.62 is going to be a nice ride to $33. There are less banks. The elephant climbed the mountain before. Can it return?